Peter, thanks for being with us today. Earnings are out for a week, notable groups today. We're getting a mixed bag here. Some companies are pulling in a surprise beat, names like Expedia that we're seeing. But what else are we seeing with the latest earnings calls?
Well, it doesn't surprise me that there are a handful of companies that are going to benefit from what's happening. Obviously, if people aren't going out and they're staying in, maybe they're spending money online that might otherwise have been spent through other vehicles. But of course, ultimately, a lot of these consumers are just not going to have the money to spend. They're going to run out of aid from the government, or the government money is going to run out of purchasing power due to inflation. But I think the vast majority of companies are going to see substantial hits to their earnings as a result, not just of the coronavirus, but of the recession that was going to start anyway, which the coronavirus has simply accelerated.
Definitely seeing a lot of movement here. Peter, we're also seeing the first major energy company cut its dividend. So it seems like this is the start of the trend of some suspending buybacks and even cutting these dividends, which was traditionally the mechanism used to boost stock prices before. But how will the market react going forward now that we don't have any of these artificial boosters that we once did?
Well, obviously, this is a negative for the market. I mean, a lot of companies have been able to borrow cheap and then use the cash to buy back their own overpriced stocks. Many of these companies are now the recipient of bailout money, unfortunately. They should be allowed to fail so that new management teams can step up and clean house. Instead, we are perpetuating the management teams that made these reckless decisions. But of course, the decisions were made based on monetary policy that was being provided by the Fed, and the Fed is now doubling down on that failed policy. But yes, I think you're going to see a lot of problems for the market. The only thing it has going for it is the Fed. But that's it. But meanwhile, in order to prop up the market, the Fed has to destroy the purchasing power of the dollar. So what investors should be doing is buying gold stocks, because gold and gold stocks will be the biggest beneficiaries of monetary policy.
Well, you are the gold, and well, not just that, but gold is also there's a threat now that it could disappear. Well, not necessarily disappear, but there will be a shortage of gold. What about other precious metals or even industrial metals that we're seeing also go down, like copper, nickel?
Well, that's because of a slowdown in production due to work-related stoppages from coronavirus. And I think that is temporary. The question is how temporary. But precious metals are a totally different story. They are a monetary alternative to fiat currencies that are being debased the world over, but particularly in the United States. So I think when it comes to earnings, gold stocks are going to be among the few companies that see a huge boost to their earnings. In fact, they're benefiting from the reduction in energy prices, because energy is a key cost when it comes to operating a gold mine. So gold mines right now literally are gold mines, and I think investors are ignoring the potential. Even though these stocks have doubled off of their March lows, they're still very cheap, and I think there's tremendous upside that most investors have not even bothered to notice yet.
Now, Christy, I want to get one more question in for you. We have about a minute left. Will this more new stimulus help? The PPP program, they're implementing more rules, possibly asking for even a return from some of the loans that went out. This just came out a few hours ago. Christy, will this help?
Well, it might help marginally. So, think about it. When it came to the PPPs, let's face it, JP Morgan was one of the biggest failures when they revealed that it provided loans to virtually all of their commercial banking customers, but only funded about 6% of the applications for the PPPs. Now, small businesses have actually named 4 banks in a lawsuit saying that large business loans for relief were prioritized over small firms who were then unable to access the funds. And those were the people who needed it the most. So that includes B of A, Chase, and US Bancorp. They were all named in a lawsuit where they claimed that they processed larger loans due to the massive fees that they would generate from originating and processing them, versus then on the first come, first served basis that the Trump administration had originally promised. So they are trying to come out and issue new guidances in order to help so that this doesn't happen again with the additional package.
Well, and banks are already saying that they might have run out of money already. We'll see how this all plays out. Peter Schiff, CEO of Euro Pacific Capital, and Moomba's co-host Christy I. Thank you.